Good morning. Hi, my name is Canice Wu. I'm a venture partner at F50, and I've been working with David Tsao for since the very beginning of F50, and very excited to speak with you today. And today's topic really is about what I call what VC wants, but I also kind of adjusted that, particularly due to the pandemic and COVID as well. So very excited to share with you some of my observations and hope this is helpful. So let's get started. So why is Silicon Valley unique? Again, this is something that is quite unique in the world in terms of really the concentration of some of the biggest tech companies in the world, the biggest, some of the highest concentration of entrepreneurs and innovation in the world, and of course, world-class education. Those are all things that we're all very familiar with. However, one thing I noted is that particularly due to COVID, what definitely is seen is a lot of industries, virtually all industries, it's radically transformed overnight to what we call digital transformation. And in the very real sense, Silicon Valley is really leading that transformation through not only a lot of the companies that you're very familiar with that are changing and evolving into digital transformation, but also helping a lot of companies to move into the digital world much more rapidly, such as retail companies, such as ways to engage different audiences around the world. And a lot of that technology comes from Silicon Valley. I mean, classic example, that will be Zoom as an example here, right? So which is right here in Silicon Valley as well. So I think that can lead to, I think, very interesting situations and interesting opportunities. So let's go into it. So also, if you think, I get asked the question, is this a good time to be in startups and innovation? Absolutely it is, right? So I call major shocks typically creates very interesting opportunities. If you look at back in 2008 during the kind of the Great Recession, if you're right. So if you look at the total number of companies funded, it didn't really dramatically drop, right? So in fact, it kind of stayed right in line. And if you look at a number of the successful companies that were founded during a recession, the list is quite impressive. Right? Looking at Airbnb and Uber from a share economy point of view, from a B2C point of view, like Square, WhatsApp, Venmo, those are all companies that started. And finally, of course, in the B2B world as well, which is sometimes in some way counterintuitive, a lot of these companies started in a recession. And notice at the bottom there, a little company called Zoom, right? That's been this has gone through second shock, if not the third shock, right? And they have thrived through that process, right? So I think it's a great opportunity, in fact. Yeah. And I wanted to talk about what some of the entrepreneurs share with us a lot. And what I call, we've seen this movie before, that a lot of entrepreneurs come and says like, we will create a product and then the product will be so compelling, it will sell itself, right? So, and the answer really is the product needs to be sold. No matter how compelling it is, it absolutely needs to be sold. And the product is also universal, where you have a one size fit all. And especially in this COVID environment where different communities around the world struggles with different aspects of that, whether the solution or the demand of the product probably would need to be really tailored locally for the specific needs of that particular market or that particular community. You only need a salesperson, right? Where I'll just hire a great salesperson and they will sell it for me. And I think this is an interesting paradox, actually. I think the best person to sell the product is you, right? The entrepreneur. You thought of it, you invented it, you created it. Like if you can't sell it, nobody else will be a better person to sell it. So I think you really need to think about how you can be the best salesperson. You can certainly add sales capacity, but you need to be the lead salesperson. And then of course, finding a partner to sell for me. That's yet another paradox as well, right? Where instead of finding a salesperson, I'll get somebody else to go and be my distribution partner or business development partner. I think that can absolutely help expand the reach. But I think in the end, the person that needs to look the person in the eye and sell it is you the entrepreneur, right? You'll need to capture 5% of the market to have a massive market. We've seen this many times in terms of market analysis, right? I think this really needs to be looking at how do you really capture the market, and you need to build really the focus on a bottom-up capacity. And then finally, manage the customer from remote. The reason why I highlighted this in red is that in the past, we say like you need to be eyeball to eyeball with a customer to sell it. But with the COVID and everybody working from home, the game totally changed, right? Where now you need to be able to manage sales pipeline, sell the solution, as well as manage customer from remote. So this is in some way kind of got completely turned around 180 degrees. So that if you have not been able to manage customer from remote, you need to think about how you are going to be effectively manage customer remotely. I want to share a case. This is a little bit dated, but I think it still gets the point across. Way back in the dot-com bust, where there's a very famous case called Pets.com, right? Where this is talking about really, let's build a massive market and we can sell a lot of it. So if you look at the number of dogs in the United States, there's roughly about 78 million dogs in the United States. If you look at the business case here, right, if each dog eats 2 meals a day, I have 2 dogs and they each eat 2 meals a day, and average dogs say eat about 2 pounds of food per meal, right? You quickly get to consumption of over 300 million pounds of dog food, right? If you talk about $1.50 per pound of dog food, you get about half a billion dollars market sizing per year, right, for dog food. And if you only capture the 5% of the market, that's $23 million a year. Like I said, if I only capture 5%, I can make that. And in 5 years, I can generate about $100 million in revenue, right? So sounds great, right? So, however, not so great. This company very, very quickly went under, right? And why is that? It comes down to a very simple analysis that it's about unit economics, right? What happened back then is that per pound of dog food, it costs more to ship the dog food than they're able to generate in revenue. In other words, the more they ship, the more they were going out of business, right? So this is about, it's not about what we can scale up and then it can solve all problems. So you have to fundamentally understand the unit economics before you scale to really be able to understand what is the compelling financial value proposition that you bring to the market. They're very important, especially in today's world where due to COVID, the economics changed. And you really need to understand cost to sell, cost to serve, and what you can generate in terms of revenue in the beginning over time. Very, very important to really have a very compelling financial proposition. Also, what we have learned from a lot of entrepreneurs in terms of lessons learned from working with a lot of entrepreneurs is that it's not, you need to adapt, not easy to adapt the product to specific markets, meaning that, again, this is not the one size fit all, where you really need to understand the specific community's customer needs, some of the competitive dynamics, some of the channels to reach the customer, again, may be very unique based on various different markets and communities you serve. Need to adapt to specific business practices. This is where, as you look across the world, different cultures and legality and taxations can be very, very different, right? So it can affect the unit economics dramatically. So you got to really think about where you're going to place the bets and which market you're going to focus on. Need to invest to build local traction. And this is about being local, right? You got to think globally, act locally. And this is where about what are the key relationships that's needed to really build the traction and build the momentum for the local market you need to serve. And possibly looking at mentors and advisors that will have an understanding of that specific market or that specific community, I think will be important. And then once you get the basics, then need to be able to scale and scale effectively. again, this is, I'm going to talk about the next point, but this is going to be really important as you think about how you adapt your business to the new normal, if you will, right? And finally, I think one of the key questions is, how have you thought about, or have you reinvented the business for the new normal, right? What are some of the key things to think about, right? What are the customer experiences? Especially when it's either direct to consumer or even direct to business, right? The customer experience is now very remote, like this, right? So how do you create that customer experience? So you still need the customer intimacy. It's just sometimes it's not able or not physically in the short term, or maybe even the mid and medium term, to have a face-to-face type of interaction. Looking at the business model, right? With the new normal, the business model has changed, right? If you haven't adjusted a new business model, it's time to think about it, right? So yeah, it's very, very important. And how do you go to market? How do you develop that relationship? How do you go and basically sell, and how do you go scale? I think it's very important, especially in the new normal. And you got to really, if you haven't already invented a new business, you need to reinvent it now for that new normal. And then the clear elevator pitch, right? So this is where I typically say that, the 7 most common questions that a VC will ask as you think about pitching to an investor. And I added one for again, the new normal, right? But here we go. So these are pretty straightforward, but what is the problem? You need to have clarity on what is the problem you solve, right? Is it a problem that needs to be solved? Are people willing to pay for you to solve the problem here? It really starts there. VC usually typically, first thing they look for is, do you really have a compelling problem that needs to be solved, right? And then of course, what is the solution, right? Does your solution solve that problem? This is the classic case of, especially given how tight the money is today, vitamins are great, castor oils are great, but I need aspirin to solve my headache right now, right? Because I don't have any time to think about solving future problems. So I think this is really casting that problem and solution to what's needed to be solved right now is absolutely critical. And then of course, why is your solution unique? Typically there are lots of competitors, lots of different I would say products that can have an adjacent market that is going after the market you're going after. So you got to have a very compelling reason and compelling differentiator why your solution is unique, and also what is the IP to your solution, right? And who are your customers? This is very important in terms of, it's about knowing who the economic buyer is, and who are the economic buyer, who are the people who will benefit from the solution. And they may be different people, right? Even for enterprise, it's very, very common. The solution is different than the person who has to write the check. But even for consumer products, typically the person who decides to buy may not be the person who writes the check. And if you have children, you know exactly what I'm talking about here, right? So yeah. How do you acquire customers? And this becomes, again, very important, especially in the new normal, right? Where being able to have that personal touch may not be possible or may be very challenging. How do you build that connection with a customer in some sort of a remote fashion or a distant fashion? How do you scale the business? This is very important, especially in this, again, this environment. What are the key factors can really be able to help you scale the business and to move the business to the next level? Again, an investor will look for very scalable businesses. And how do you convince that investor that your model and your ability to reach customers scale economically? And finally, why are you truly unique, qualified to deliver this, right? So you need to have the pedigree, and you need to have the advisor of the pedigree to really convince the investor that you are truly uniquely qualified to go after this. Those are the 7 questions that I typically talk about with entrepreneurs that are looking at potential investment from VCs. But I added one, and I've heard this from a number of VCs, particularly more recently, which is, what are you doing to pivot to the new normal, right? So given the new normal and everything has changed, right? What have you done or what are you doing to adapt to that new normal? And I think in some ways, this is a very important question. Every VC is thinking about it because not only do you have to pitch to a VC remotely, but how do you really adapt your business model to that? I think that becomes really, really important and becomes how you cast what you're doing in the context, I think can help the VC really understand you have thought about that and you have found a compelling solution. And finally, I think this is, I want to kind of end on this slide a little bit here, right? Winners and losers, right? So if you look at COVID-19, and some of these are pretty obvious and some of them are more subtle, like, aviation, so travel and tourism is tough, right? Very, very tough, obviously, right? So, and of course, things that directly address needs of COVID, such as, telehealth, for instance, right? It's booming, right? But there are also, the way I describe it, you need to think about where you are in the spectrum. And are you on the red side or are you on the green side? And also, just like the speaker previous talked about that, in education, a lot of these demands on the red side of the equation they still have problems to solve, right? People still have their everyday problems, business have their everyday problems, despite COVID. Ability to help them solve those problems, I think could lead to very interesting new invented models in terms of how you address that. Think about the winners and losers. So I would say be very, very mindful of this because the investors are very mindful of where to place the bets and where are they going to see the opportunities despite all the challenges in the world today, despite all the COVID and despite the new normal that we expect to live in for some time. They're absolutely silver lining in a number of these. And that's why I urge you to really think about and then again cast your pitch along those lines and can really help the investors in the audience really come to grasp what the potentials are as you adapt to that new normal. And finally, I'll just end on this, right? I love to always end on this, which is, the essential part of creativity is not being afraid to fail, especially given the world we live in now. Lots of people are frozen, or lots of people are saying, oh my gosh, I think absolutely, as I mentioned before, when there is a shock, there are always opportunities. And those who can identify the opportunities and think out of the box for that, I think has huge opportunity and potential in this environment and going forward. So thank you. I hope this has been helpful for you, and good luck to all your endeavors. Thanks.
Thanks, Canice.
You're welcome. Yeah.
Thank you. June, you have any questions for Canice? June, go ahead. Ask Canice your questions.
Yeah, my question is when when an investor consider invest a different kind of business or companies, do they have any like preference? For example, some of the investor they specialized in the health industry, some of them specialize in the IT only, or they basically they combine things together.
Yeah, I think a lot of the investors that I interact with are more focused, and especially given the environment right now, they're really looking at where they see the opportunity for growth, right? So yeah, I think it's what I've seen is typically more sector focused, and then now really even more focused on what are the where are the opportunities are. Also, what I've seen and also heard is that because the investors can't meet the entrepreneurs face to face, right? It's an investment is very like eyeball type of business right now. They cannot do that. They have to, the investors themselves have to change their model, right? In terms of how do they really be able to identify more opportunities and kind of spread the risk a little bit, right? So in that context, I think it's kind of a related question, but I see that as a trend as well, right? So, And I think again, as a startup looking for investment, you got to be mindful what the investors are wrestling with, and how do you help fit basically what they're looking for.
I see. I see. Okay, thank you.
Sure.
Because it's quite different if they're looking at the like say like in like a technology industry, they're probably looking at the 2000 percentage like increase.
Mm-hmm.
But if you look at like education or other industry, maybe their expectation is not like thousands or like times return. So that's actually that's my question. Yeah.
Oh, I see. I see what you said. Yeah. Yes. Yes. Yeah. I would say the return investment. Yeah. I think again, a fund usually. I mean, a fund usually has a certain return on investment expectation here, right? So, and I think the question you're asking is, it's about ability to scale.
Mm-hmm.
I think that is related to that. I think the question you're asking. I think investor, particularly the typical, again, just the typical VC financial investors are looking for business to scale and scale rapidly, right? That's usually how they generate the very large return on investment. And I think that it's important to think about it that way. Is again, VCs may not necessarily. I know VCs is not the best source of capital for every possible businesses. That's absolutely not true, right? So, I think as an investor, you got to look for the investor that not only can bring you value, but their return on investment is consistent with your business model.
I
Right?
see.
If your business model is something that can scale very rapidly, then a traditional VC, financial VC may be a great source of capital. But if it's not that type of model, then you probably good to look for other source of capital where their return on investment and their expectation in terms of the relationship with the entrepreneur is more consistent with what you need to grow your business.
Mm-hmm. Mm-hmm. Okay, thank you.
So, Canice, I have a question for you. So, when you are listening to a pitch, and obviously at a very early stage, before bit of or a startup with bit of attraction, we are betting more on the founders. Right? So, what are those trails? What are those body language, confidence? What are those things you are watching in a founder? To impress investor, right? So I like this founder.
Yeah, great question. That's a great question. I think number one. I think the number one rule of investor is that they want to look for patterns of success, right? And ideally, the patterns of success in the specific market you're going after, right? And that can be track record of a company, or can be the track record of that individual founder, right? So so I think I think that becomes important. So I think as first of all, as a founder, you should be not only passionate, because people bring passion, right? You should be passionate, but you need to have demonstrated success in the past in that specific market or that specific area. I think that if you can bring that I bring a lot of experience and I'm uniquely qualified to go after this, and I see this opportunity, right? I think that can really help the investor connect the dots. I think that's important.
Okay, one more question actually from me. So usually from like meeting the investors to close the investment, do you have any like standardized, I would say, the period, like time range? 2 months, 3 months, 1 month?
Time for what was the question?
It's like first you met the investor and then you close the you get the investment. So usually how long it takes, especially after pandemic started.
Yeah, I would say it does take a couple of months. It's not a overnight process where the investor needs to get to know the founder and the founding team, right? I mean, usually it starts there and then it goes into the solution, the technology. You know, there's a whole bunch of due diligence that goes into it. So it's typically a several month process, right? So I think with the pandemic and having to do this all remotely just elongates it a little bit more, right? So I think there, so as a again, an entrepreneur looking for capital, you know, just be mindful that it takes time, right? And to build that relationship. And also, I would say I said this many times where it's just as important for the investor to find the right entrepreneurs is as for entrepreneur to find the right investor, meaning that it needs to be a fit for the entrepreneur as well, the founder, right? You need to feel comfortable with the investor, that the investor is the right profile, can bring the value to you beyond just capital, right? Because capital is a fungible asset, but that relationship and that investor's relationship will be invaluable because once the money is there, it's a long-term relationship, right? And so you need to find someone that really is a good match to you as an individual as well as the business, and then it can be a strong win-win relationship over time. And that also takes time to develop, right? So it doesn't just happen overnight. You don't pitch and then all of a sudden there's a check. You know, that takes time to build. And if you can find that comfort level, then I think it's could be a great long-term relationship.
Okay. Yeah, that's very helpful for me. Thank you.
Yeah.
You're welcome.